Joining us now to discuss this is Anna Ashton, the founder of Ashton Analytics, and Marko Papic. He's chief global geo-macro strategist at BCA Research. Anna, how big is this economically? It does seem as though China is pulling out the stops here and realizing, number one, that they've got a weak real estate sector and a stagnant economy, and they got to do something.
Right. It definitely is pretty big. It's the biggest stimulus since pre-pandemic days. Whether or not it's enough, I think that remains to be seen. And part of the reason that remains to be seen is because there's not an indication that that the government is in any way sort of scaling back its focus on developing new industries. And so that leads to questions about whether or not the support that the government is rolling out is going to be sufficient to prop up the industries that are already the major engines of the economy. So
Marko, obviously from the get-go here, Chinese stocks have gotten a big boost. The stocks around the globe have gotten a big boost. How do I take what the Chinese did today and apply it in my own portfolio? What should I do? What should I not do?
Well, I think what you need to start looking for is value, especially in emerging markets, especially in beaten down currencies and economies. For example, BRL could be a very interesting buy at this point.
What is BRL? For those who don't know, BRL.
Yeah, so Brazilian real is a good example of a currency that's going to be pretty correlated with what China does, almost to the extent where it doesn't really care what's going on domestically in Brazil. So this is a very broad potential move by China that should benefit cyclicals over defensives and global stocks over U.S. And most important for U.S. investors is that if China has truly committed to putting in a policy bottom and actually starting to focus on fiscal policy, in that case, the dollar should also start declining, which it already has been for the past 2 months. And so that for a U.S. domiciled investor means just buy anything foreign at this point. And obviously, what else do I have to add to David Tepper's point? I mean, he is obviously a legend, and he's saying buy everything in China. Can't disagree with that either.
Let's flesh that out a little bit. He explained in part why he thinks these measures are so dramatic that were just announced. Take a quick listen to what he said about the efforts lawmakers there are pursuing.
They're also, believe this or not, swap facilities to buy stocks, encouraging buyback of stocks, encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks, not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses if you want to do it. You know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff.
Anna, let me turn to you. Why would they be pursuing such aggressive measures like this?
Because they don't have another means of really stimulating economic growth in the economy, especially with the real estate market floundering sort of indefinitely. They really do have to look to the stock market to try to boost growth. And the question is this going to make any difference to unemployment? Is it going to make any difference to consumer confidence?